All right, good morning and good afternoon, everyone. Welcome and thank you for joining us today on our first of 4 sales and marketing bootcamp sessions. Today we'll be covering 6 quota-crushing tips for loan officers, and we have our speakers, Josh Friend and Jeff Vermillion, on the line who will be introducing themselves in just a few seconds. But first, I want to take care of a few housekeeping items. My name is Jamie Lee, and I am the Director of Marketing at Insellerate, and I'll be moderating today. If you have any questions, feel free to drop them into the Q&A box, and we'll be sure to get to them at the end. We're also recording this session, and everyone will be getting a copy about an hour after we close the session. And with that, I'll go ahead and get things started and pass things off to Josh.
Morning, everyone. We really appreciate you taking your time. I'm really excited today about getting on here to do this. Excited to have Dale Vermillion with us as well. As a lot of you guys know, Dale Vermillion's got about 35 years experience in this industry, and his be a humble hero approach of really leading with service first when it comes to selling to customers really fits with what I've learned in my 20 years in the industry and training thousands of loan officers as well. So I'm really excited to give you guys some tips and ultimately help you guys serve your customers better. At the end of the day, you know, as loan officers and lenders, we're helping, the U.S. consumer with the American dream of home ownership, right? We're dealing with people with their largest financial transactions for most American consumers is their house. So having the ability to help people in that is great. So we're gonna be able to talk about that and give you some tips on that. And Dale, we'll turn it over to you, and you can tell some folks about what your experience as well.
Hey, Josh, thanks so much. And Jamie, for having me here. It's a real honor and privilege to work with you guys. And yes, as you mentioned, I'm an old guy. I've got 35 years in the business. Started as a loan officer back in 1983, and I had a chance to manage all the way up for about 12 years after that. And I've spent the last 23 training companies all over the country, and had the great privilege to train over 450 lenders around the country. So, have had a chance to work with literally a million different loan officers in that period of time, and excited to share some tips today that are based on best practices of top producers that will help our audience in dealing with the challenges of a rising rate market that we're in today, and how to really make sure that you're getting the best results out of the things that you're doing.
That sounds great, Dale, and I think you're right. We are in a rising rate environment, and that's going to mean that selling is going to become more important than maybe it did a year ago, right? Finding benefit, giving service. So I think that brings us to the first topic, which is really what are we selling and what are we doing? And it comes down to, from our experience, it's take a consultative approach. It's service. What we're selling is a commodity. We all know that, right? An FHA loan is an FHA loan, and a VA loan is a VA loan. Unless you have a non-QM product, what you have to offer to customers, they can get from you and from anybody else as well. So it's a commodity. So what does that mean? We differentiate ourselves with service, right? A saying that I've used for years is, if you give a lot of service, you'll get paid a lot. You give a little bit of service, you get paid a little. And if you take a look at the polls, the numbers, most consumers are not happy with the service they get. So being able to differentiate yourself easily by giving good service, it shouldn't be that difficult as a lender. You just have to do a few things above and beyond what other people are doing. One of the things that I have found through the years that really can set service tone is just the ability to communicate and be open to communications with the customer. So a tip that I would write down is, what is your communication strategy? What I mean by that is this. If a borrower calls you in a day, and do you call them back within the same day? Right? Some loan officers say, if someone calls me and leaves me a message, I will make sure I call them back within 1 hour of getting that call. Or if they call me today by 4 o'clock in the afternoon, I will call every borrower back the same day by 4 o'clock. One of the biggest frustration points, we've all experienced this in the past and ourselves and currently, is when you're working on something like a mortgage or insurance or something that takes time, communicating with whoever's helping you with that is very important. Are you getting phone calls regularly? Are you open to communication? Reminds me of when I was a loan officer. I started off in the industry in 1999. I was working at LoanWorks, which was IndyMac Bank's first call center. And I had a lady I was doing a loan for, and she called me every day at about 11:15. I would get a call from Linda. Linda would call me and say, hey, Josh, just checking in on my mortgage. What's going on? And I say, hey, Linda, just like yesterday, it's still in underwriting. Underwriting turn times are currently 3 to 5 days. It's been day 2. I should maybe hear something tomorrow. As soon as I hear something, I will call you. Next day, Linda calls me. And the next day, Linda calls me. It's the same information I tell her. Finally, I realized, well, 11:15 must be her lunch break. And I understand that in her mind, that this is a very important transaction because this is her home. And I decided to make a process where I started calling Linda every day at 10:30. For about 3 or 4 days in a row, I called her at 10:30. She didn't answer her phone because she was working. I left her a message. Hey, Linda, this is Josh. Just wanted to give you an update. Loan's still in underwriting. I'll be checking with the manager today. I will call you as soon as I have any information. The next day, hey, Linda, loan came out of underwriting. Just have a few conditions. I will call you later and go over those with you. What happened after about the 3rd or 4th day, Linda no longer called me. And I no longer had to call Linda. And the reason is because I realized Linda called me every day because she wanted to make sure that the mortgage loan transaction was as important to me as it was to her. As soon as I was able to let her know by the fact that I called her every day that I am working on your transaction and it is taking place and I am helping you with that transaction, she stopped calling me. And customers really appreciate that. So one of the things that you can really drive sales is have a good communication strategy. Meaning, understand that customers are calling, they want answers, they want replies in a quick, timely manner. If you're not willing to give them that type of service, they'll easily go to someone else or one of the other 100 lenders that's reaching out to them for business. So in the big picture, we have to understand that service is how we win business. Right? The question I ask loan officers when I've been training them through the years is question number 1, I say, what industry are we in? And you get a lot of answers. And the reality of it is, right answer is, we are in the service industry. So you get paid for service. So giving people good service, being able to be responsive is very, very important and effective. Dale, I know you have some thoughts on some sales solutions as well.
So couldn't agree with you more, Josh, that certainly service is one of the key things that we provide. But if you'll move to the next slide, I want to talk about the second half of that equation, because I think you've nailed it. Especially in today's market where we're seeing more of a transition towards purchase, service becomes ultimately important in the process. But not only do we provide service, we provide solution. You know, one of the things that I've taught my whole career is that if you really want to succeed in the mortgage business, particularly when we're in a marketplace like we're in today, where you've got more challenges with rates, more challenges with competition, you've got challenges of trigger marketing, where your customers are getting hammered by other lenders. You've got dealing with things like unhooking. There's a lot of challenges we face. If you're out there and all you're selling is price and product, you're no different than anybody else. That is going to get you a road to nowhere in the mortgage business today. You've got to instead be a solutions-based salesperson, and that means your goal is to educate and advocate. That's really what you're trying to do. If I think about what is the number one responsibility that I have as a loan officer, or the number one service that I provide to my customers outside of making sure that, of course, their loan closes on time and we make contract dates and all of those significant pieces. From a personal standpoint, it's I got to give them great advice that not only gets them in a loan that is unique to them, different from my competition, and provide solutions for all of their financial needs, but in doing so also protects them from making bad decisions. It's a true advocacy role. An advocate really, by definition, is an intercessor. They intercede, and in this case, we intercede between our company, who's the lender, and our customer, who is the end user. And I've learned that if you can focus more on just solutions-based selling versus price, product, and program selling, which is so commonplace in the mortgage business. And it's really commonplace because, Josh, as you know, we just came out of the longest low rate environment in all of US history and all of the mortgage industry history. You know, we saw rates in the mid 2000, tens that were 2011, 12, 13, 14, 15, 16 that were in the threes, at some points in the twos. We're now in the fours and low fives. It's a different ball game. Today, it's really about being different from your competition by providing advice that's different from your competition, providing service that's different from your competition, and giving solutions that's different from your competition. It's taking a mindset, and I love to put it this way. One of the common mistakes that I see all the time is loan officers talk too much about mortgages. Look, borrowers don't understand mortgages. Yeah, they go online and they'll use words and terminologies of things they see, but we start talking about LTVs and DTIs and FICOs and FHA and VA and Streamline and USDA. Consumers think USDA is a steak. They don't realize that's a mortgage term. What I always teach loan officers is talk money, don't talk mortgages. Provide solutions, don't just provide products. And if you do that and cap it with great service, where you're really helping your borrower get into a solution that makes sense from every vantage point. So if it's a purchase transaction, making sure it's the right down payment to fit their not just short but long-term goals, making sure it's the right product for them, making sure it's the right term for them, making sure that the payment fits into their budget, making sure that you're creating all of the savings you can. When you do all of these things, you provide solutions that separate and differentiate you from your competition, and you are viewed as a true advocate versus just as a loan officer or a salesperson or any of those things. Because at the end of the day, we all know that the term salesperson does not have a positive connotation, nor does the term mortgage loan officer, unfortunately, because of the mortgage meltdown of 2007. So we want to really be viewed as that advisor, that guide, that confidant, that consultant, that individual who is looking out for our customers. We call that the others first approach to selling, where we really base it on providing great solution because we want to make sure that we are looking out for others before ourselves. That's absolutely critical.
Dale, I think that's a great point, which is we're their advocate. And that was something that we loan officers, and I always use I like the term loan consultant over loan officer, because as you said, you're the loan officer, you're the advocate. Obviously, every loan officer out there, and I remember as a loan officer, I would tell a customer and say, listen, if I could give you a 0% interest rate with 0% closing costs, with no documentation and a 100-year term, I would do it for you. It's my job to figure out how I can help you save the most money based off of the guidelines that are readily available to you. And that's exactly it. It's that advocacy. And I think with that, one of the keys in this marketplace to focus in on is take a complete application. When you talk to a client, when they're on the phone with you, you're the expert. Like you said, Dale, we talk loans of LTV, DTI, we talk mortgages all the time. The knowledge base that you have as a loan officer is so much more than the average consumer. Just like when you go to the doctor's office, they check your temperature, they check your heartbeat. And I say, well, I have something in my eye, but it has nothing to do with my temperature or my heartbeat, but they still check everything because you're in the office and that's what they do. They're the experts. The same thing as a loan officer, right? Take a complete picture. So then when you're helping the customer, you're able to really easily explain to them, how you can save them money. Also, one of the things that we should really look at in this industry is how do you leverage content and how do you leverage messaging and marketing that fits with the customer? Again, we're selling a commodity. So the CFPB, I'm sure everyone here loves the CFPB. They did a study, and it was for 2015. They were trying to understand how U.S. customers bought mortgages. They wanted to understand the buyer journey, right? What they found, and you can go online, you can pull this stat, that over 75% of every borrower who closed a mortgage transaction, and it was 2015, had taken one application with one lender. I think it was 77% to be exact. One application with one lender. So let me say that again. 77% of the time, someone closed a mortgage transaction in 2015, it was with the first person and the only person they took a mortgage application with. So if you understand the value and the power of that, if you understand giving great service, getting a complete picture so you can be their advocate and explain to them great benefit, once you've invested that time, make sure you follow that up with additional value. Someone may not be ready to buy right now. Maybe they're thinking about a remodel. So there's, a couple more transactions in this marketplace right now. One's going to be purchase transaction. So if you're talking to somebody about a purchase transaction, you're taking a complete application, you're giving them what they can afford, you're giving them different programs. Now you want to make sure you're using content, a system like Insellerate that is going to give them things like first-time home buyer tips, or maybe they're not a first-time home buyer. Maybe they're selling a home and buying a new home. Make sure you're giving them a campaign that says things like how to increase your curb appeal, tips for baking cookies on open house day, so that way they can get, more happier customers, if you will. If you leverage content correctly throughout the transaction, if you've taken the application, if you've invested the time with the customer over and over again, over the majority of the time, you will get the business. So what's important though is to give them value. You don't want to just send them an email saying, I got great rates, right? Take the conversation away from great rates, take it to, I'm going to give you value, spring cleaning tips, right? Winterizing your home. How do you give them something that automates the next action, that follows the borrower journey? If you're able to do that correctly, now whenever they're thinking about a mortgage transaction, they're thinking about you. You're giving them something of value. You're giving them great service. You're being their advocate. So when they get back into the buy-in mode, they're going to call you. They're going to reach out to you because you're the person that they've done business with. I know for myself, like car insurance, I'm sure I could call someone else for car insurance and maybe save some money. But my insurance agent I've had for years, he does my home insurance, does all my insurance. The service is really good from him. I get like once every quarter, I get a newsletter with some tips of spring cleaning, etc. He has trusted value with him. I've trusted in them because they communicate and it's relevant to my situation. No difference in the mortgage transaction. Give something of value and you will keep customers engaged with you. Dale, any thoughts on that?
Yeah, I mean, again, in full agreement that it's important that you are keeping in contact with them, keeping things relevant to their situation, utilizing your content to match up to what the needs of that borrower are. I see it a lot as I travel the country where we will send out marketing pieces or provide collateral materials that don't even match up to the needs of the client. We don't ever want to do that. We want to make sure that everything is cohesive between what we're offering and what the borrower's looking for, so that we've got a match in between those two. And I like the quote you got up here: the secret is not in getting your customers to understand your strategy, but it's you understanding theirs. There's an old saying that says, seek first to understand, then to be understood. I think it's important when you talk about things like complete application. One of the biggest complaints that I hear from loan officers or concerns is, man, if the operations team could just, close things faster, we'd close more loans. And my response a lot of times to the loan officers is, look, the majority of problems that I see in operations many times fall back to incomplete applications. The more complete the application is, the more commitment you have from the borrower. The more complete the application is, the more time you're spending with them to get commitment from the borrower. The more complete the application is, and the more documentation you have access to, the more that they're in the deal with you. So I think it's important that those points you made are critical to success in today's marketplace, where it's highly competitive, and you've got companies that are nipping at the heels of your customers all the time.
No doubt.
Having said that, let's talk for a little bit about not making it about rate, because what I see a lot that in today's market will just absolutely kill your business and kill your results is loan officers leading in with rate. You made a comment earlier that was very interesting to me. When you talked about you go to the doctor and they do a full examination, it's interesting to me, and it always has been interesting to me, that the very first question that the borrower's going to ask you on just about every application you're ever going to take in the mortgage business is, what's your rate? That's the most common question. Now, why do they ask that question? Well, a lot of people think they ask that question because they literally want to know what's your rate, but that's really not true. And let me tell you why. Because it can't be a literal question. Why not? There is no possible way, Josh, if you're a customer and you call me up today, and this is the first time I've talked to you, I'm a stranger, you're a stranger, we don't know a thing about each other, you're making this major financial decision, and you say to me, what's your rate? I have no idea what the answer to that question is yet. Why? I don't know a single thing about you. I use this analogy all the time. It's like going to the doctor when you're sick, walking in the doctor's office, standing 10 feet away from the doctor and saying, okay, I'm sick. I don't feel good. What's wrong with me? And having a prescription already filled out for him to sign to take on your way. We don't do it that way. The doctor's going to look at us and make one statement. Can't make a diagnosis without an examination. What does that mean? I need to know some things about you. I need to do some tests. I need to ask some questions before I'm going to know what the diagnosis is. It's no different in the mortgage business. Borrowers are going to ask you what the rate is because it's a conditioned response question. It's the obvious question they should ask. It's the one that everybody and everything advertises around. You go on any one of the major portals out there to inquire about a mortgage loan, and you're going to see rate advertisements everywhere. That's the key. But there's an old quote that I love that I wanted to share with the group today that says this: price is what you pay, value is what you get. And it's never what you pay that matters, it's always what you get that matters. Now let me just clarify that for a minute. Price in the mortgage business is rates, points, and fees. So when a customer comes to me and says, what's your rate or what's your fees or what's your cost, they're asking me a price question. They're asking me how much the cost for the loan is. But that's different from the value of the loan, because the price, which is rates, points, and fees, is what you pay, but the value, which is the benefits of the loan, is what you get. So if you're coming to me for a purchase loan, for example, the value is how I can provide service to close your contract on time, how I can interact with your realtors and the people in the transaction, what kind of terms I can provide to you, whether or not I can meet the guidelines that you have and get you qualified based on your qualifications, what product and program I provide to you, what LTV and down payment is appropriate for you, what payment is the right payment based on your budget. There's a whole lot of things that determine what makes the right loan for you. So you might get a really low rate quote from somebody, but that doesn't mean that's the right loan for your situation. I've learned in the business that you can get a low rate and a bad loan. Those two things can happen because price and value are separate. And I can prove that because we've all bought things in our life where we paid more for them and got more value. We've also bought things where we paid more for them and got less value. And we've bought things where we paid more for them and got the same value. So I've learned you can pay more and get more, pay more and get less, pay more and get the same, pay less and get more, pay less and get less, and pay less and get the same. Price and value are separate components in all transactions, including mortgages. So I want to remind loan officers today, this is not 2014, 15, and 16 anymore, where you're sitting on 3.5 rates. If you were in the refinance side of the business, you're cutting the borrower's rate 2 to 3%. That was a pretty easy transaction. That was low-hanging fruit. Today, it's a different game. Today, if you're on the refi side, you're looking at cash out debt elimination if you're really trying to help your borrowers to get to a good loan. If you're on the purchase side, you're really looking at service as the primary mindset because it's all about getting the deal closed. So it's building a proposition around value, which is the benefits to the borrower, the service you provide, and the ways that you help them different from your competition versus just the rate. And I always love to use this analogy. Borrower calls you up and says, hey, I'm looking for the lowest rate. We get this all the time. My response is always the same. Do you mean the lowest in the world? The borrower always says the same thing. Yeah, I guess so. And my response is, do you know how many companies have the lowest rate in the world? And they go, well, no. I go, well, I do. It's only one. That's why they're called the lowest. There's literally, if they're the lowest, that means there's nobody lower, but there's thousands of lenders. So that means you got to make thousands of calls to find that lender. And here's the deal. By the time you find them, they won't be the lowest anymore anyway, because rates change all the time. Rate is a fluent thing that changes. And in today's commoditized market, we're all pretty much within 1/8 of a quarter to each other. So if you're making about rate, all you're doing is creating shopping mentality and you're answering a question you can't answer yet. So if a borrower says to me, what's your rate? My response is, great question. Don't know yet. I can assure you my rates are super competitive. I'm going to get you a rate that's going to be fantastic, but let's learn a little bit more about you. And let me show you how I can save you money in more ways than my competition, provide you better service, and show you why you should work with my company. Give me a minute or two to just kind of give you some of the high points of what I can do that they don't do. And what happens is you get a captive audience where they start to listen to things like your credentials and the benefits you can do and some of the service elements you can provide. So you're creating some separation. Does that make sense?
No, that makes a lot of sense. I really like the value is what you get. You know, and explaining that to a customer. And as you said, Dale, in today's market, we're talking cash out transactions for elimination or home remodel, or we're doing purchase transactions. And explaining to a consumer what that actually means in dollars and cents to them is hugely important. And, you know, something that I would suggest is anytime you're taking that transaction, let's say you're doing a cash out transaction, you're paying off credit card debt. You want to explain to the customer, I'm saving you $250 a month, right? That's $3,000 the first year. That's $18,000 in the next 5 years. Or if you take that $250 and you apply it to your mortgage payment, you'll pay off your house in, do the calculation, 19 years. I'm going to save you 10 years of payments at 120 payments at $2,000 of payments. I'm going to save you $240,000 in payments. Actually really explaining what that means to the customer is huge. If you tell someone, I'm going to save you $50,000 in interest, they don't know what that means. I don't know what that means, right? Do I spend that? Is that a hypothetical number? Is that at the end of the loan, do I save that $50,000? Or how do I save that $50,000? Break it down to the customer and explain to them how they save that money. The other thing, Dale, as you said, when someone calls and asks you for a rate, you can't just give them a rate. A great line I would use is, you know what, we have many loan programs here at XYZ Lender. What I'd like to do is get some basic information so I can tell you exactly how I can help you today. Because to Dale, to your point, you don't know what rate they're going to get. You don't know what they qualify for. So how could you ever turn that into a rate conversation? And you're right, customers are conditioned to ask rate because that's all they know what to ask. They don't know how to say, hey, how much money can you save me by doing this or by doing that? So finding that benefit and clearly articulating that benefit to your customers is huge. I remember doing a loan for a customer, and I was able to save him about $210 a month. And he was a servicing client of IndyMac Bank. So he called in a servicing line, and someone said, hey, you should talk to us about a refinance. You have a higher interest rate. So they sent them over to me. I spoke to him. He wasn't looking for refinance, but I took an application. I broke it down. I said, I can save you about $210 a month. I went through the process with them. And he said, well, you know what? That's not really worth my time. I don't think I don't need the $210 a month. As he showed me, he was a manager of a butcher shop at a Ralph's. He was saving, I think he said he was saving like $600 a month. He did. He had a pension. He had a 401k. He had stock account. He had an investment property. So he said, Josh, I'm feeling pretty good. I don't really want to spend all the time. I don't have to get the appraisal. I don't want to have to go get my W-2 and pay stubs. I just don't really, and I don't want to have to start my loan all over again. Even though I was able to save him $12,000 in the first 5 years, I broke down the entire financial transaction. So this makes all the sense in the world. He wouldn't buy. Then I was looking at his credit report, and I said, Joe, I see here you have a loan for a Toyota. What is that? Is that a lease, or you're buying a car? Oh, I'm leasing a Toyota Camry. Oh, really? And that's about that's $250 a month of round numbers. Yeah, about $250 a month because I got the credit report. I said, Now, doesn't Lexus make a nicer version of that car? Oh, yeah, I love a Lexus. Let me see something. I went online, looked at lease specials on Lexuses. And lo and behold, I could get I think it was the ES300, whatever the same Toyota Camry version he was driving, but we could get the Lexus version, and the lease special was like $400 a month. So, Joe, well, what about this? Would you like to drive a Lexus? I understand you don't need any more money. What if you do this refinance and that $210 you save, you applied it to your car payment? Now you're driving a Lexus. Not only are you driving your Lexus every day, you're also having an extra $60 to get that Lexus waxed every month. So it's looking really good. He said, that makes sense, Josh. Let's do a loan. Lo and behold, I actually did, I think, 3 mortgages for him. He refinanced a few years later. He bought 2 more investment properties. I earned a customer for life, but I was able to explain and break down the benefits and something that was tangible to him. So it actually made sense to him, and he was able to buy because you get what you pay for. And he was very happy to do a transaction to be driving a Lexus versus driving the Toyota Camry. So next thing is really kind of talking about what you get, what you pay for and what consumers expect is how do you change and evolve in today's marketplace? We all know that customers are used to transacting on their terms. If you want to buy a book, you no longer have to go to the store to buy a book. You can order it on Amazon Prime and you can have that book the same day. If you want to go shopping for something, you can go online. Last week I was at Target with my daughter and we had just bought an ice cream maker. And we said we were going to make some homemade ice cream that day. And so we're buying all the ingredients at Target, and I was looking for ice cream rock salt. Well, Target doesn't sell ice cream rock salt. So I went on my phone, I Googled ice cream rock salt, Instacart showed up. I have an Instacart account, I looked at it, Albertsons has it. I said, buy it now. That rock salt was at my house before I got home from Target. That's what customers expect. They have that expectation. So you really need to put things on their terms. So if a borrower wants to text with you, text with the borrower. If they want to call you, call the borrower. If they want to email you, email with the borrower. If they want to come in and shake your hand, let them come in and shake your hand. You need to work on the terms of the borrower. They expect immediacy. Also, you can increase the communication channel through automation. If you have the correct CRM, it's going to be helping with these communications. So when loans get approved, your borrower can know, the real estate agent can know automatically without having to put yourself in the middle of it. Borrowers expect to work on their terms. They expect immediacy. So you need to develop a communication strategy and have a system that matches their buying habits. I can tell you right now, and I tell people this all the time, if I'm trying to buy something, if you do not text me, I will not buy from you because I don't have time to take your call and I'm driving in my car and I'm working. I don't want to answer the phone if I don't know who you are, or if you're trying to sell me something, I don't really want to answer the phone. But if you text me, I'll be more than happy to interact with you because now text messages, I can respond on your terms, on my timetable, not your timetable. And even with that being said, we all know text messages, 98% of all text messages get read within 2 minutes. It's the most read communications channel there is in the United States. So how do you increase your volume? Meet borrowers on their terms. Communicate when they want to communicate. Make it easy for them to reach out. Make it easy for them to get information, and you'll get more and more business. Dale, any thoughts on that?
Dale, you might be on mute.
Yes.
My apologies for that. Yes, couldn't agree more with what you just said, Josh. And I think today with technology being what it is and the fact that, the business has changed so dramatically, we know that every customer and every person thinks they're busy, and many of them are more so than they've ever been before because of the advent of technology. It's very important that we do meet them on their terms and we sell in a way that they feel good about. I think that's absolutely critical to success. And as we've talked about all these things, we've talked about, content, we've talked about, how to really position yourself from a sales standpoint, not just be an order taking, rate quoting, product quoting loan officer, but really being an advocate, really educating, providing great service. I thought it'd be a good idea to kind of wrap this for loan officers by talking a little bit about how to be organized too and have a daily plan, because the bottom line is we all have one thing in common for sure. We might probably have a lot more than that, but the one thing we know we have for sure in common is we all have only 24 hours in a day. And it's what we do with that 24 hours that makes all the difference in our success levels. And what I see a lot of as I travel the country is I see a lot of wasted time. I see a lot of reactive sales activities, a lot of reactive business activities, meaning that we let our voicemails and our emails and our meetings and all these other things control our life to the point that we don't really focus on the things we're really designed and hired and built to do. Well, if you're a loan officer, what is your greatest value? It's sales. That's what you need to be doing. You need to be spending the majority of your time and the majority of your day in sales activities. I see a lot of loan officers spend way too much time on pipelines. They're managing and maintaining and looking at their pipelines incessantly and not doing things to move them along and not being judicious with their time. I see loan officers wasting time on, just constantly responding to emails, many times ones they don't need to respond to, or many times ones that they can manage better. So one of the things that I wanted to mention today that I think is critical is you got to start every day by having a plan. And that plan needs to be really fostered first thing in the morning, where you sit down and you establish time blocks. What is it I need to accomplish today? There's always two things I look at in my day. What are the things I must do, and what are the things I want to do? The things I must do are the things that are going to put money in my pocket, the things that are going to get deals closed, the things that are going to give me balance in my life, the things that are going to help me to achieve success in all areas of life. I've got a block for those things because, again, I have a finite number of hours. If I walk in the morning and I just focus in on, whatever is happening that morning, and I start my day reactive, it usually stays reactive all day long. And a lot of times we go home at the end of the day and go, oh my gosh, I worked 10 hours. I don't feel like I've accomplished anything. That's a mistake. I used to have a real simple rule when I was a manager. This is going to sound kind of crazy, but my rule was when you came in the morning, you weren't allowed to check your voicemail or email until 11 o'clock. Now, here's the reason why. There wasn't anything good in there half the time. So what I do is say, look, here's what I want you to do. I want you to come in at 9 o'clock in the morning. Actually, at 8:45, I want you to prepare yourself. I want you to make sure you're warmed up and ready to go. I want you to get, your leads in order, prioritize your day. And I want you to start your day by selling. Start your day by calling customers, by responding to some of your leads from yesterday. Start generating some opportunities for yourself. Get your day started with sales, because those voicemails and emails will still be there at 11 o'clock. They're not going anywhere. And what I found was typically the majority of my sales team had a sale by 11 o'clock in the morning. Well, if you get one committed sale a day, you put 21 deals a month in your pipeline, you're going to close typically at least 10 to 15 loans a month doing that. That's going to be a huge payday for you. So it's important for loan officers that we not only make sure we provide the best service, the best advice, that we've got good content that matches up to the needs of our borrowers, and that we're really meeting them on their terms, but we also have to have a plan. We got to go in each day and say, okay, how much time do I need to commit for my sales activities? How much time do I need to commit for my partnership activities? How much time's got to be committed for my pipeline activities? Well, how much time is going to be spent just for flex time? So some time I'm going to basically plan ahead for things that are going to come up that I'm not sure of yet. You've got to plan your day and prioritize your day. And when you do that, what it creates for you is it creates a better system. So that what's happening is you're coming in and you already know, I have already dedicated a percentage of my time to really making sure that I am getting the things done I need to get done. It's building out blocks of time for the different activities that we have to do during the course of the day. Because here's what else I know. When you work on like activities, you tend to work on them faster and more efficiently. So if I do my pipeline for an hour and I'm only doing pipeline stuff, I'm kind of in that mode, I'm going to get more done. If I'm doing sales activities, I'm staying strong, I'm staying motivated, I'm staying focused. I'm continually getting each call, I'm getting a little bit stronger and better because I'm getting practice. It builds out a good rhythm, it builds out a good process, and it builds a plan. There's an old saying, says plan your work and work your plan. That's what you want to focus on. So thoughts on that, Josh?
Yeah, Dale, I couldn't agree with you more of the time blocks. First, I have a saying, busy doesn't mean productive. There's a lot of busy people out there, but aren't necessarily productive. And having those time blocks are huge and critical. I know if we think of the psychology of being a loan officer, it's either the easiest, hardest job or the hardest, easiest job, depending on who you are. The reality that what I found was it comes down to the personal mental motivation of being able to be positive, up, and happy all throughout the day. So you are at your best when you're talking to the customers. Having those time blocks. When I was a loan officer, I absolutely had time blocks. 100% every single day, I had my 10-hour day. I'll call it 8 for some people only work 8, but I had my day and each hour was planned. And how it was really effective for me was you come in and you have, to your point, you have calls and you have requirements and you have people that want things from you and you have good news, bad news, all these things to deliver. And if I wanted to sell and be effective, if I was on the phone trying to talk to new clients and I had all this other stuff in the back of my head I got to get done, that anxiety kept me from being at my best. However, when I had a time block and said, you know what, between 10 and 12, it's nothing but new originations. I can be on it because between 12 and 1, I will do all my pipeline follow-up. So now that anxiety, that thought of when do I have to get this stuff done was off of it wasn't on my mind anymore. Now I was able just to focus on actually selling, because that's what, as you said, Dale, when you get in the groove, right? I see loan officers who will try selling at the same time they're trying to stack a file, right? Or they're selling at the same time they're trying to work on loans and processing. You're never going to be effective doing that. How do you get, Dale, as you said, how do you get into that groove? Right? If you're ordering appraisals and you're doing it, or if you're sending out disclosures, whatever that process is, if you do it 3-4 times in a row, you become highly effective and efficient at it. The other thing is time blocks. Now, just in the big picture, think about this: is all you loan officers and your mortgage companies, you don't have to reinvent the wheel. Okay, there are systems like Insellerate that can help you do this, and can use best practices to help you be as efficient and as effective as you can be. You want to make sure you're working on what's the most valuable to you. A study we have done was based off of 8,000 funded loans. And what we looked at was, in the buy-in process, what are different trigger points and different communication strategies that really effectively change, really move the needle. And what we found was that the average lender sent out disclosures. 36% of the time they sent disclosures out, the disclosures came back in and went into processing. However, and now we have the data because we have lenders that are on a platform and we have integrations with the phone system, so we know all this interaction with the consumer. What we found was when lenders called the customer 3 times in the first 24 hours, I'd write this down, 3 times in the first 24 hours of disclosures being sent, those disclosures came back 79% of the time. Over double conversion. So that really points to being effective with your time, setting up your day, right? Having a system that will actually help you manage this. So Insellerate can actually give you these trigger points. We'll tell you, this is the most valuable person you should be working on right now, and here's why. If you put those things together, you can be highly efficient. That's what it comes down to. As Del, as you said, we only have 24 hours in the day. All of us have the same amount of time. No one has more. So how are we as efficient as possible? Make sure you have a system and process that follows up and backs that up. I know we have some questions. I think we only have a few minutes left. So Jamie, if there's any questions out there that you want us to take on, please let us know.
Okay, if anyone has any questions, feel free to type them into the chat box. We did get a few, but those were answered along the way regarding the recording. But maybe if you wanted to kick things off with a question that you guys get most often from loan officers.
Dale, you wanna maybe, what's the question you get often from loan officers, or a tip that you see that you think that is relevant?
Well, I think right now, I mean, the biggest issue that the loan officers face that I see is just this whole concept of, the rate variations, the rate increases, and the challenges that they have with the increased rates. And again, I just want to keep reminding you that we're all in the same bucket. If a borrower comes to you, and I hear this a lot from loan officers, well, borrower called me up and said, hey, I'm looking for a 3% rate. Well, they know as well as you do that doesn't exist, but they're calling you for some reason, which means there's some kind of a need there. They may be looking for something that's unrealistic, but don't immediately discount that to mean that there's no opportunity. My response is simply, well, Mr. Jones, just like you read the same news I do, as well as I do, rates have been going up for the last 4 or 5 months. Let me ask you a question. There's a reason you're looking for a low rate. And I'm assuming that reason is you're looking to save money in some way. Why don't we talk about what it is you're trying to save money in, or what you're trying to do through this mortgage that would change your life financially? And let's see if we can't do that for you today, because we got rates all over the board. We're incredibly competitive, and we're helping people save money every single day. It's never thinking for the borrower, or never being too assumptive that just because they said they're looking for something that you don't think you have, that there's not something there that still makes sense. You got to go into every transaction with the mindset that if they're on the phone or if they've inquired, there's something going on that's an opportunity here. My job is to dig in and find out the opportunity. If you do that, you get opportunities that you didn't know you were even going to have. And then when you do that, you win deals you wouldn't otherwise have won.
Yeah, no, you're absolutely right, Dale. It's finding the opportunity. It's not the rate conversation. I remember years ago I was doing a loan for someone, and I wasn't lowering the rate. They called, I took an application, didn't have any credit card debt, they didn't need any cash out for anything, but they still wanted to discuss rate with me. And I was really perplexed. I said, I can't really help you. Well, I still just want to refinance. And I was taken back. I said, that just doesn't make sense. Well, about 15 minutes in the conversation, he said, well, Josh, listen, I'm filing for divorce in a week. And at the end of the day, I'm going to have to put that home in my name anyway, so I want to go ahead and start the loan process now. If I would have just taken that call originally and said, hey, what rate do you have? And he said, I got 5%. My rates at the time were 6%. I would say, well, you got a great rate. Call me when you need something else. I would have hung up. I wouldn't have gotten the transaction. So to your point, Dale, don't prejudge. Don't make assumptions of why they're calling you. If I can leave all your loan officers one tip, you should be shooting for a 50% application rate. If you talk to a customer, you should be trying to get 50% of them into an application. That will drastically increase your conversions. Step one, sell the application. Don't assume, then get into the sell and the benefit. I think we're all running out of time here. So everyone that's on the phone, I really appreciate you being part of this. Dale, I really appreciate it. This is going to be a series. So we have a couple more boot camps coming up, so you'll be able to learn some more tips from us. And again, guys, remember, we're in the service industry. You're the experts. Sell service, take complete application, and you're going to grow your business. Thank you all for joining.
Thanks, guys. God bless. Appreciate you, Josh. Thanks, Jamie.
Thanks, Dale.
Thank you. Bye.